Good evening, everyone. Welcome back. In this video, we are going. This is the continuation of the my earlier video, simple moving average. In this video, we are going to see a little bit of simple moving average, continuation of last video that we discussed, and then we are going to see a very different indicator which is called triple moving average. Without wasting any time, let's get started. I hope my screen is visible to you all. This is my screen, and now we are going to see that how the indicator, which we call as simple moving average. Here in 1 2 minutes, I'll give a recap of my earlier video that we saw in my previous video. We saw indicator named simple moving average, which take the averages of maybe open close prices. It can also take open prices, but usually we take the average of close prices in very indefinite periods of time, and after that we plot a what I could say. I'm not going to say graph. Wait, I'll show you what we plot. See, in this way we plot not graph. We plot a line. These are all the close prices with this indicator, which is named as simple moving average. Here are more simple moving averages of different periods. This input 20, 50, 100, these are called periods. And this line, this is called as a simple moving average line. So this was a recap of my previous video, and today we are going to see that what will happen if we have two SMA crossover. That what is the meaning of two SMA crossover, and what is the meaning of short term SMA, and what is the meaning of long term SMA. So here are two SMAs, one SMA, second SMA, and here you can see there is a crossover of two SMAs. So before moving to this two SMA crossover, the first thing what we are going to see is what is, huh, you guys might have one question that if this lecture is of SMA, why is it named triple moving average? So after finishing this concept, you are going to understand the concept of triple moving average. So this SMA concept is very much important for the concept of triple moving average. If you understand this concept, triple moving average is very much easy for you. So first we are going to see that what is short term SMA. So, what is short term SMA and what is long term SMA? So, if your SMA signal if your SMA signal has different periods of time, we name it as short term and long term SMAs. So, what will be the periods of a short term SMA and what will be the periods for a long term SMA? So, short term SMAs are basically, you can say that a 5-day SMA, or you can say it is as a 10-day SMA. These type of SMAs we call it as a short term SMA. What are 5 and 10? These are periods. What are the periods? For this, you have to see my previous video. So, these are the periods. I hate this kind of things. Yeah. A short term SMA, and this is nothing but long term SMA. So, if the periods are like 50, 100, 200, these kinds of periods we call it as a long term SMA. And if the periods are 5, 10, we call it as a short term SMA. So, now think this single line. This single line is nothing but SMA. SMA of some of particular period, maybe 20, 10, 30, 40. Okay, this is a simple SMA. Now we want to predict the market with two SMAs. So how would we take these two SMAs to predict the market? This is so simple that we are going to take one SMA of short term and one SMA of long term. When we do one short term SMA and one long term SMA, this concept we call it as a SMA crossover concept. Yes. So when we take two SMAs, one short term and other long term, then the thing we get is SMA crossover. See, so when we take, suppose here I am going to take one SMA, like this is of SMA 20. So this is a short term SMA. And another I am going to take, no, not this SMA 7. It is of 300. So it is a long term SMA. So I'm going to take SMA 1, I'm going to untick SMA 2, and then I'm going to take SMA 7. So I have two SMAs here. This is one SMA, this is second SMA. The first SMA is nothing but a short term SMA of period 20. It is 20 now? Let me confirm it again. Yes, it is of period 20 and it is of period 300. Yes, yes, yes. And then I'm going to take, this is the SMA of, this green line is long term SMA of period 300. So now we have two SMAs, short term SMA and long term SMA. So how we are going to predict the market on the basis of two SMAs? If we predict the market on the basis of two SMAs, wait, I'm going to write it. If you want, you can take the notes. If we predict the market on the basis of two SMAs, on the basis of two SMAs, then we yes, then we call it as SMA crossover prediction. So this concept we call it as SMA crossover prediction. So what would we think that we have two SMAs, one is short term SMA and another one is long term SMA. So what we are going to predict out of these two SMAs? So it is so simple. It is so simple. I'm just going to repeat one more time what we read along all this time. We have two SMM is just simple moving averages, two lines, two SMA lines. One is of short term. Short term means we have 5, 10, 20 short periods, and another one is long term SMA, 5, 50, 100, 200, 300, like this. Okay. Now, when we have one line of short term period and we have another line of long term SMA, then we have to predict the market. Either it will be bullish or bearish or side. So we are using one short term SMA and one long term SMA to predict the direction of the stock market. That what to not exactly the direction, to predict the overall stock market. We are using two simple moving averages, and this is a very standard concept of this indicator. Is it works or not? You have to backtest it. I'm going to tell you the concept and you have to backtest if it works or it doesn't work. So we have two SMAs. One is short term of period 20. Why I took 20? Simply I just took it. And another SMA of period 300. Why I took 300? There is no logic of taking 20 and 300. I wanted one short term SMA. I wanted one long term SMA. So I took both the lines. Now I have to predict the market on the basis of these two SMAs. This concept we call it as SMA crossover prediction. Oh, why I wrote here prediction? No, wait. SMA crossover prediction method, in which these are two SMAs drawn in one graph, and we are going to predict the market on the basis of this. So, what do we predict on the basis of this? So, I'm going to write it here. So, if 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 the short-term SMA, please, if you want to make the notes, you can make it, because at last you have to backtest this concept. And please, if you are doing the backtesting, tell me in the comment section. You maybe share it with me on Instagram on PS Finance. You can get the idea from my YouTube channel only. So you can share your predictions. It's very much useful for me also and for you also. If the short-term SMA, if the short-term SMA cross, why I wrote crosses? It's crosses over long-term SMA. Hey, please be visible, man. Then, then the then there will be a bullish signal. Yes, this is the prediction of one SMA. Oh no, Rosie. And if just wait a second, guys. Just wait a second. Don't worry, I'm not going to waste your time. Don't worry. And if the short-term SMA crosses below the long-term SMA, then there is a bearish signal. So here I wrote the prediction. So okay, I wrote it. Now I'm going to explain it to you. So what we have seen that here are two SMAs. The upper one is the short-term SMA and the lower one is the long-term SMA. So if the short-term SMA crosses over the long-term SMA, then there will be a bullish signal. If the short-term SMA is crosses here they are crossing or not? No, they are not crossing. They are fully apart. If the short-term SMA crosses over the long-term SMA, see here they are not crossing. Here they crossed. Here they crossed. So if the short-term SMA crosses over the long-term SMA, that there will be it is a bullish signal. It means the market will be bullish. And if the short-term SMA crosses below the long-term SMA, then there will be a bearish signal. See, here I have two SMAs. Upper will be a short-term SMA, lower will be a long-term SMA. Here also, here is short-term SMA, here is long-term SMA. Here is short-term SMA, here is long-term SMA. This is the short-term SMA. This green one is the long-term SMA. This is the long-term SMA. Here the green one transformed to red one, and here is the long-term SMA. Wait, I'm going to write it here. This is when 30 September 11:45. So this is a long-term SMA. Why I wrote it here? Because here is a crossing. You can see here is crossing, so I wrote here long-term SMA, and this is here the short-term SMA. So the prediction of the market, the prediction is if the short-term SMA crosses over the long-term SMA, then there will be a bullish signal. And if the short-term SMA crosses below the long-term SMA, then there will be a bearish signal. This is what we can predict from SMAs. Is it right or wrong? Again, I'm telling you, you have to backtest it. And I am very much fond of your results. So this is the prediction from these signals. Now, now, now what we are going to see that, wait, 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 wait. I think it's all, it's all mixed. Hmm. See. So here is a simple prediction of how SMA works. Now we are going to see one more prediction from this SMS. That is nothing but we have to confirm the trend. How we are going upper also I told the same thing, but this is all, now also I'm telling the same thing with a little bit different method. So if the price is above SMA, then the market is in uptrend. The price is below SMA, then the market is in downtrend. It's just a recap, nothing else. Is in downtrend, and if the slope of SMA also shows the trend. How it shows the trend? If slope is steep, then trend is strong. So these are just this is the basic trend confirmation from an SMA, from SMA. If price is above the SMA, market is in uptrend. If price is below the SMA, market is in downtrend. If slope of SMA also shows the trend, then if the slope is steep, then the trend is strong. This is a very basic thing. But here, what we read before, this is the basic prediction of an SMA, how we confirm a trend. But here, what we have read here the crossover SMA strategy, that what we can predict from a short term SMA and a long term SMA. So here we can predict if the short term SMA crosses over a long term SMA, then there will be a bullish signal. If the short term SMA crosses below a long term SMA, then there will be a bearish signal. This is what we read from this SMS. So I hope this all is very much clear to you. I wanted to cover triple moving average in this video only, but I think this video is above, I think it is more than 18 minutes. So I don't know if I have to cover triple moving average here or not. It's okay. I'm going to cover it. Let's see triple moving average also. Not much, but a little bit also I'm going to cover. So the new concept here is triple uh, triple moving average. So what is this triple moving average indicator? Okay, someone asked me what is backtesting. Backtesting means if you okay, I'm going to tell you what is a backtesting. Suppose I'm going to delete it. Suppose you predicted a market in a very similar way. Suppose I am I am thinking that in every it is just a prediction, okay, it is not correct. I am thinking that in every 5-minute candle, if I make a rectangle here, Oh, where the fuck is this? Where the hell is this rectangle? Okay. If I make a rectangle here of every 5 minutes, in first 5 minutes, the market goes, it touches the uptrend and it comes down. And when it crosses this bullish, uh, either the upper line or the lower line, the market will go up or down. If this is, hope you make a video with charts. Are you not able to see charts? Oh, okay. Okay. So if this is a uptrend, this is a uptrend, I am predicting this is a uptrend. So suppose one day it is correct. Now again, I'm trying it in this. So suppose I predicted that in this 5 minute rectangle, this market is going to stay. But here it fails. So this is called back testing. I am again going to draw this here. This is my 5 minute rectangle. I'm going to draw this. And I predicted that the market, if the market crosses this rectangle, it will be bullish. So for this day, it is correct. Again, I'm going to test it here. I'm going to draw this rectangle in this 5 minute triangle. See. So here it is bullish. So for this day, my prediction is correct. For this day, my prediction is correct. For this day, my prediction is wrong. So each one concept I back tested for 3 days. For 2 days, it was correct. For one day, it was wrong. This is called back testing. I hope you understood it. What is your name? Sham. Yeah, I hope you understood it. This is called back testing. If any concept, any indicator, I'm telling you here, and I don't know if you want to know that it is correct or not. So we have to put that indicator again and again on different days, and we have to back test it, that how much percentage of time it is correct, or is it wrong. This is called back testing. What you're saying? I hope you make a video with charts on live. I'm not a SEBI registered analyst, so I can't come live and tell you the predictions on live market. So sorry. Okay, let's continue with our today's indicator, triple moving average. Okay, so we have saw what is simple moving average. Now we are going to see that what is triple moving average. In short, triple moving average is a trading technique where moving averages on different periods used together to better identify the trends, reduce the false signals, and more reliable to buy sell points. To buy sell points. It's basically an extension of SMA and EMF. So triple moving average is nothing. As we saw, simple moving average with a crossover strategy, same is the triple moving average. Triple moving average is a crossover strategy with three SMAs, or you can say EMS. EMS are different from SMS. SMS are simple moving average. EMS are exponential moving average that we are going to see in next lecture. So here we are going to say that what is simple moving average, what is triple moving average in three SMAs. So instead of using one SMA or two SMA in triple moving average, we are using the crossover of three SMAs, and all the three SMAs must be of short term, medium term, and long term. Yeah, it's okay. So all the SMAs must be of short term, long term, and medium term. So what is the meaning of three SMS? Short term, oh, why I am making this requirement? Wait. So all the SMAs of short term, long term, and medium term always must be, it must be of distributive among the periods, as we saw that short term is of 10, 20, 50 periods, long term is of some periods, and so on. So here we are taking a short term is for most to most 5 or 10 periods. A long term, sorry, a long term is of 20, 20 to 40 or 40 to 50 periods, most probably. And oh, I'm so sorry, it's not long term, it's medium term. 100 to 200 periods, and so on. So here we are taking three periods. One is short term, another is medium term, and another one is long term. We are taking three SMAs, and we are taking the crossover of three SMAs here, where we are going to predict the market. Is it going to be same as we saw the crossover of two SMAs? But the name of this indicator changed to triple moving average. Before moving further, I'm going to show you this indicator in Tradingview. See, this triple moving averages. This is one line, this is two line, this is three line. These are nothing but the crossover of three SMS or EMS. See, here triple moving average. The length is this, the length is this. These lengths are nothing but the periods. These are 50 period SMA. See, 50, 100, 200. One line of this 50 periods, another line of this 100 periods, and another line of this 200 periods. So we are going to see 150-day SMA of in this pink color, the 100-day SMA in this blue color, and the 200-day SMA in this green color. Visibility in the seconds, hours, and so on. So these are the settings of these SMAs. So here are three SMAs crossover, where one is short term, another is medium term, and other is long term. So now we are going to see that how this works and what kind of signals it gave us. How this works for traders. So when this SMS will give us a buy signal. So when short-term SMA, when short-term SMA A is greater than the medium-term SMA, this is so simple. It is just formulas. Just we have to see. There is nothing to understand much in this SMA concept. I know in earlier indicators I told some very much of mathematics, this, that, but these are so simple indicators. We don't have so much of mathematics in it. Medium term SMA, it's just that the simple predictions. But I'm not sure that all the indicators works. We have to backtest it in the live market. We have to see that these indicators works or not. So we have to backtest it all the indicators. If you are doing backtesting, please tell me what happens, because I can't tell you what my backtesting results are. So when is the buy signal in the buy signal in the SMA? When the short term SMA, like this pink color SMA, is greater than the medium term SMA, and the medium term SMA is greater than the long term SMA, this will show a sure short buy signal. Do you have to buy? Please backtest it on your own. This is what this concept says. Similarly, when will you get a sell signal? So I'm not going to write it all along. That's okay, I'll write it. When the short term SMA is less than the medium term SMA, and I know what, and I think you know the rest, and the medium term SMA is less than the long term SMA, then we'll get a sure shot sell signal. This we also call it as this we also call it as a triple moving average, or moreover a crossover SMS strategy with three SMS. Because if we have three SMS there also, this is also a simple strategy like normal SMA, but I don't know why they have to make so much of indicators with this single term, but it's okay. If they have, then we have to find it out. Now. Why do people use okay, fine. Why do people use these SMS signals instead of they have so much many indicators? So these have not much like one two advantages. That why do people use this triple moving SMS when we have EMAs and more moving averages? Then why this new indicator? I don't know the exact reason that why do people use it, because the same thing we can do in SMS, but it's okay if they want. So the one reason is it filters out the noise better. Okay, provides stronger trend confirmation than normal SMS. Mhm. Provides stronger trend confirmation than normal SMS, and it can be applied to any market, including crypto. Market, including crypto. So I hope these both concepts are very much clear to you, like what is SMA, what is triple moving average, what is a crossover strategy, why do we use it, what are the settings of these concepts. And I know you guys might have thinking I didn't tell you much mathematics, because it doesn't have much mathematics. So I think this all very much clear to you, and thanks for watching. And in next lecture we are going to see the exponential moving average or the EMA indicator. Thank you so much for watching.